Chinese stocks slumped more than 7% on Tuesday to their lowest levels since December, with panic selling intensifying after the flagship Shanghai Composite Index SSEC crashed through the key support level of 3,000 points. Investors stampeded out of shares after a grim Black Monday sparked mayhem in global financial markets but failed to prompt fresh rescue measures from Beijing. The blue-chip CSI 300 index CSI 300 fell 7.1% to 3,042.93, while the Shanghai Composite Index SSEC lost 7.6% to 2,964.97 points. All index futures contracts slumped by their 10% daily limit for the second day, reflecting extremely bearish sentiment and pointing to darker days ahead. China's benchmark indexes have now lost roughly 20% in August and are heading for their worst monthly performance in 6 years, barring a sharp rebound in the last few days of the month. On Monday, China stocks fell nearly 9% in the worst single-day trading session since 2007. Investors had hoped the sharp drop and its global repercussions would prompt swift action from Beijing, but no economic or emergency market rescue measures were announced overnight. The absence of any sentiment-soothing editorials in Tuesday's state media strengthened views that the Chinese government now has little will to prop up share prices. "How can investors stand slumps like this?" said a 76-year-old retired worker who only gave his surname, Gao. "The government has messed up the market. It's wrong for the government not to rescue it." All sectors fell sharply, including banks. CSI 300 buy, after a morning rebound in the sector petered out. Benchmark mainland indexes have not only given up all the gains made from Beijing's unprecedented stock market rescue in July, in which hundreds of billions of state dollars were directed into the market, but this week entered negative territory for the year to date.